cost per se. The cost per loan is not too crazy. It's more of that
No,
structure, you know?
It's not
I mean,
bad,
if
but
you're
if you
getting
got a package of
110%,
100 loans, you're talking 200 grand like that. That adds up pretty quick.
Yeah, I mean, if you guys were, if we were just an underwriting company, yeah, or something like that, right? So I'm not interested in 2 grand a loan, though. I'm interested in we make commission on the loans, right?
Yeah.
Percentage, right? So those companies that I use are like the third party processing, third party underwriters, and of course the law firms are always third party, right? So we're putting those people in place, which you guys could as well. There's companies out there. It's just the scale, and I'm not interested in that. I could hire my own underwriter and pay him hourly and then make a margin on that, but that's not what really we're about. We're about creating the note and using
right.
those best practices. So I use the best law firm, right? That all the big dogs use to actually do the documents, and I use the industry standard processors and underwriters that are industry standard. There's no point in trying to make a
Nope.
couple bucks off that, right? So that's not my
Hmm.
business. My business is putting my clients in the best position to win, which is using those best vendors. So I don't care about that 2,000 bucks at all. It's more about getting the deal done, and then yeah, we're gonna make our 2% commission or whatever we're gonna make as the originator on the loan. But for you guys that are obviously in a different seat, the
Yep.
cost isn't that much, and I would probably have to charge you way more than 2,000 bucks that it's gonna cost me. Uh, but there's a delta there, that you guys can make some money there, and you don't have to, charge
So
two
for every
percent like I
loan
do.
you're saying is $2,000, right? So if you had, say, 10 loans up to $2 million, you're saying the cost is gonna be about $20,000, give or take, right?
Yeah, just for the
To
like I
do
said,
that
the third
transaction.
party underwriting type, like the
Yeah.
cost. Yeah, for sure.
Yep.
Yeah, it's not the cost isn't that intensive. It's more of you don't realize that you're gonna have to have 5 people on your staff, which all make 100 grand, right?
No,
So
and
that's
we
five
have
hundred
the
grand a year
patient.
that just kind of floats around. That makes the math a little different, but the actual per loan cost isn't crazy. But it's a
Yeah.
lot more to get to where I
Because you
am
sit there and
than
you
just
you
that.
spent 20 grand, right? You sold 2 million worth of assets at 7%. You're sitting there and you bought it at 13, right? It's
Yeah.
you're hitting home runs.
Yeah.
Yeah. That's
Interesting.
crazy stuff. Yeah. So Nick, when you're doing all this kind of DSCR loans and whatnot, are you ever pre-approving the borrower at all? Working with a borrower and finding the lender?
Well, I mean, that's kind of our job. We're the lender, so I mean, our role is, they apply with us and they need a yes or a no, right? So
Okay.
legally, that's our responsibility. That's kind of the RMLO hat is, someone applies, whether it's business purpose or not, right? You come to me, I don't know whether you're gonna close in an LLC or not for sure. I have to treat you as, the same as anybody. And I'll have to get you an answer within 3 days, right? You apply, I pull your credit, you give me all your info, I have to give you an answer in those 3 days. So,
Gotcha.
um,
So you're pre-approving the borrower.
yeah, I mean, we're pre-approving the borrower for whatever they submitted for, right? So if they're just going for, I need to know what I qualify for, then yeah, for sure. But if they already have a thing in mind, then yeah, I mean, we're going straight to, do you qualify for this house? If they submitted a house, in the application, and that's where I didn't like at the bank, right? It was either you fit in this box or not, and that was it, right? It was Fannie's box, and that was it. Fannie and Freddie, the government
Sure.
or
Hmm.
FHA, you fit in the box, or I have to just tell you, sorry, bye. So that's why we had to go and find where my goal is that everybody that comes in, I have an outlet for them, and that's typically, what I preach to my people. Whether that's a DSCR loan, and then sometimes even it has to go like full commercial where we're just doing asset-based lending, right? Hard money type
Sure.
lending, which I'm sure a lot of your guys do as well, is just, they're just looking at collateral and that's it, just appraisal. Uh,
Hmm.
Yep.
and that's the I call it the hierarchy that we have to go through, right? VA is always the best loan. If they qualify VA, I have to by law give them VA. They tell me they're a VA borrower, I have to give them that. I can't even go down the list, right? So we have a little bit of a different type of qualification.
But
Um,
most of the people though come from us would be person who's owns a property and they're seller financing it to a borrower and then want to have their borrower pre-approved so they can create the note.
yeah, for
Where
sure.
most
Yeah,
of
we
the time these
pre-approve
borrowers,
borrowers all the
yeah,
time. Yeah. So if they don't have a contract in place already with the seller financing in place, then yeah, we can pre-approve borrowers. I mean, that's our job by law. So you don't need to know me to do that. Just tell your borrower, hey, go click next button and you know,
Yeah.
they'll get an approval within 3 days because that's our job, right?
Yeah.
So yeah,
And
that's
how much
easy
that typically cost a borrower?
to do the oh, it's free. Yeah, nothing.
Okay.
Yeah, we pull the credit for free. We don't charge them up front or anything. And yeah, if they qualify, we'll send them the letter. If they don't qualify, we'll send them some tips on how to improve their credit. I'm big on the credit improving as well. I'm not a
Sure.
credit improvement company, but I always pull the simulators. So whenever we pull credit and their credit's low, we'll run the simulator and say, hey, you need to work on XYZ. Come back in 3 months. Once you work on XYZ, they click the button again. If their credit's improved, great, we'll send them the letter. So you guys can
Sweet.
use that to your advantage for sure.
Yeah.
Because yeah, you know, me being licensed, I have to by law get that answer to them quickly. So you guys know that I'll quickly get them the answer, as long as they get us their, you know, their W-2s and all that, if that's what we're going
Mhm.
for. And then yeah, we'll qualify them for a conventional loan, but if they're going to end up doing some creative stuff, you know, you'll know that they at least qualify for the most restrictive, typically, which is, you know, Fannie or Freddie conventional.
Yeah.
What typically is the biggest problem borrowers are having when they come to you? Just what kind of crazy stuff have you seen where you're like, dude, you can't qualify for anything?
Well, right now it's just a lot of people are priced out, so that's our biggest
Okay.
challenge. We've pre-approved people 6 months ago that are nowhere near approving now, right? Or I guess
Wow.
now it's about a year or whatever, right? Since the rates started climbing. So for us, the challenge is usually everybody has bigger eyeballs than they can afford, right? So everybody comes to you, I want to get a $500,000 house. And then you do the math, and if they can make it, you know, it's either barely there, and then guess what? The rates go up by half a point, and now it's not even in the ballpark, right? Now we got to be more realistic. So that's what's had a lot of people sitting on the fences right now. I don't know if your types of clients are in that area. But as far as like problems, the biggest thing we had recently was just all the COVID stuff. So COVID had extra guidelines,
Mhm.
Okay.
which, you know, as private investors, you guys probably didn't know that Fannie and Freddie put all these extra guidelines, especially for like self-employed borrowers. We had to get a bunch more due diligence on the self-employed borrower for the last, 4 years since COVID, because a lot of people were getting the government loans, the PPP loans, right? The SBA loans.
Yeah.
That threw a lot of deals for a loop. Haven't seen a lot since because that kind of, you know, went through its course. But there were all these extra flags we had to check for those SBA type of loans. We had to have the bank statements to prove their income, when before we just go off their tax returns, what they claimed. And
Yeah.
then during COVID, they just released it about, I think it was about 4 months ago. They don't make us now get extra bank statements on top of the tax returns to prove the business income.
So if a borrower is in default, right, and we're going through foreclosure and they're just behind, is that something we can send you and say, hey, listen, can you qualify this guy for a different loan and get us out?
Yeah, but that's difficult, right? So you guys aren't reporting on credit, so I don't want to put my foot in my mouth here. So let me think about my
Most of our
answer here.
servicers
So I don't want you guys to
Yeah.
take advantage of me. Um,
Yeah.
but yes, if they've missed a payment, you need to report it, right? I'm gonna send
No,
you.
they are. Our servicers report it for us, right? We use a
Yeah,
couple
but if
servicers
you're
who
in private,
report it.
you can fill out the form however you want, right? I send you a VOM, you fill it
Yep.
out. Please be honest, right? If they've missed a payment, I gotta know because we're all
Yeah,
screwed.
no, it would be more like, listen, they're 2 months behind. They're constantly doing stuff like that, and they're willing to refi out, or maybe their interest rate's at 12, 13%, right? And they want to get down to a lower rate. It's something that maybe they've been behind. Cause we have a bar right now that I've literally sent like notice of default like 4 times. I
Yeah.
would love for them to get out of the situation, but it sounds to me that most likely they probably wouldn't qualify because of all the bad history they have.
Well,
Bad
I have
credit history.
solutions. I have solutions for everybody. So again, that's kind of my forte and why I went away from the bank and in the more traditional route. I wanted to be in control of my destiny. So what I preach to my team, I got over 300 loan officers, is we want to have a home for every loan, right? So whether that means we got to get as creative as we can get. I mean, if you give me some people that'll do seller finance, my guys will work with them to make it happen if that's the last ditch opportunity, right? My guys are willing and able to do whatever it takes. But within the written programs, there's a lot of stuff in non-QM that allows for bad situations, right? So we have like our alt doc A, B, C, and then even some, lower than that, where you can have 130. Some of them you can have 230. Some of them you can have 160. But mortgage history is very important, right? So if you got like 260s, I don't think there's anything I can do for you. And hopefully you guys are honest when you fill that out, because I would
So we
love
would
to
actually
take you
have the
out,
borrower,
but once they
right?
go
It's something
260s,
we can present to a servicer and say, listen, guys, see if you can get the borrower to send their application to, Nick and his crew over here and see if we can get them to refinance out of us. I have a loan right now, it's a 14% interest rate.
Yeah.
Right? Could that person who's struggling could get into a 7-8%? Again, if their credit score is decent enough, right? And they're behind our payments, they may be up on everything else. I'm not
Yeah.
saying to be, kind of cheating the system, but if this person can qualify and we just getting tired of them, we can refer them over and say, listen, go get refied out.
hell yeah, that's what we're here for. Yeah. And
Yeah.
it will help the borrower too, right? I mean,
Yeah.
I'm all for taking someone from a 14 to a 7 if they're better, and it will make them better. So yeah, if they're just short every month by, a couple $100, and that's just killing them, that could make the difference for someone, someone's life. So that's totally cool for me to solve people's problems. And that's
And
what
then
we're
as
all
far
about.
as filling out your docs and being honest on it, most note buyers will use a third party servicer. So
Yeah.
it's not us reporting it. It's going to get from the servicer. They have no incentive to fudge the numbers there.
Yeah,
Yeah.
yeah.
It's
When
gonna
we
be what
get
they've
when we
got.
get the third party servicers is very easy. But I do get weary when I get the handwritten out in pen,
For sure.
VONs from the seller finance, and
Yeah.
they skip a couple boxes, and it's like, oof, I don't know. I need to follow up, right? And I'll usually
Yeah.
have my people call and follow up, because that is where we get a little discrepancy. And we're doing a lot of takeouts on the flips, right? So we'll have some weird, hard money people, and they're at the end of their term, and we can't get it closed. Here's a good example too of you guys that do the short note. I don't know how many of you guys doing the 12-month notes and the super short-term notes.
Some, yeah.
But that's typically the notes we're taking out is a lot of the hard money stuff. And the problem I find a lot of the times is at the end of the 12 months, they're not extending and they're not giving terms, right? So they'll fill out the VOM. I can't refinance them until month 12, right? They have to have 12 months seasoning, right? To get the full thing. But then we'll get stuck in this middle where either it's a sub-servicer and they just say, no, it's done. Our contract's over, right? We're not going to fill out. We're not going to say that they get another month, because they don't, because we're bound by XYZ, right? So we could get stuck in this gray area where it's like the private note holder will give them a 1-month extension, but we have to get it in writing, and the sub-servicer kind of sticks us there. So that is a challenge a lot of the times, where we're trying to be as helpful as we can, but we get stuck in between kind of those two parties, where we just have to know, yes, you'll give them a month because I need a couple days. There has to be a little leeway between the 12-month, this note's over, until we can actually take them out. There's going to be a 30-day, so the more flexible you guys can get with that, the better. When I'm talking to your guys, help me out, right? Get flexible with extensions. Just put it in your contract. Charge a point to extend it 6 months. I don't know how often you guys do that on your short-term stuff. But that's the more standard hard money stuff that I like, where it just says, we can read it right there. It just says, if it goes past 12 months, we'll give one extension at 1 point cost. And then I just know the payoff's going to go up by 1 point. It's just automatic. There's no complicated stuff, and we can be more helpful that way. So that would be where we get stuck a lot of the times. But the more they can use the servicer, as you mentioned, Nathan, the better, because that makes it super easy. If it's an automated one, super easy, super easy.
That's what we're looking for, is those ones with servicers, and we get those too, where it comes from the seller finance guy, and it's a spreadsheet at best. But how do I know? Not that I doubt anybody, but at the same time, I got to be able to prove accuracy. And
and at the
really
same
go back
time,
to
like
borrower.
you're saying, is they want to get rid of the note, so they're incentivized to fill it out.
Yeah.
But then you also get some guys, like I said, that will say, no, I'm not extending it. I'm like, well, I can't get you your money until you extend it, because I can't get this approved until you say that you'll take one more payment from this guy, or you'll just let him slide on the payment, right? So you'll get them to fill out that thing, and if they just don't understand that the goal is to get them their money, they need to be honest, one, which, obviously, hopefully everybody is. But two is flexible, right? If it's 12-month term, write in what the next payment's going to be, or if there is a next payment, so that we can then take them out, because the underwriter's not going to, if they're foreclosing today, the underwriter, we can't, if they're out of compliance, if they're defaulted, it's just doesn't work, right? And you don't want to do a whole new note and stuff.
No.
So auto extending the notes would definitely be a big thing for those short term.
Interesting. I never thought about, like, usually typically it's a 12-month balloon, right? And that's it.
Right. Yeah.
Yeah, which is fine to write it in, but then you just give yourself a 60-day for financing, because all of our takeout stuff for DSCR is going to be 12-month seasoning to give us the best terms. 6 months I can do, but a lot of times there's restrictions like improvements, right? So I'll need to like prove the rehabs or whatever they did to get the value up. And then the zero seasoning, there's only like 2 options, and it's really strict. So from you guys structuring your stuff, yes, the more you can give me a 60 days past 12, you'll have better luck getting people taken out, which helps everybody, right?
Interesting.
Very
Well,
cool.
Before we disconnect, Nathan always has a question he wants to ask our.
Yeah, so
Special
I'm
guest.
curious, Nick, with your background and what you're doing, I'm more curious where you see interest rates going. Where I just read something here this morning that said 7.5%. It's the highest it's been in I don't know how long, and they're expecting it to go up. And so I don't know. What do you think? Where with what you've seen, and where do you think we're going? Where are rates going?
I talk about this every day. I love this stuff. I mean, it's gonna be tough. So it's all about the Fed, right? So we're always going off the Fed's movement.
Mhm.
So the only, I guess, bright light, as I mentioned before, is DSCR, right? Which is a little counterintuitive. So as the Fed's been going up, and the standard 30-year Fannie Freddie's been going up, we've seen the DSCR come down. So that's where we see some opportunity in non-QM and the liquidity in the markets that are not your traditional investors, right? These are the REITs who need the higher yields. So they're wanting these more risky products, but they also want them securitized and standardized. So that's kind of why I always preach about, this is kind of a nascent industry, right? This DSCR is kind of this hybrid between your old school commercial loans, which were asset based, and there is underwriting, but it's just appraisal versus just the property rent, and then clear the borrower of all their other mortgages and all the other fraud and bankruptcies and all that stuff. So a lot of opportunity there. Rates in general, I think we're gonna keep going up for the next couple months, until I hope that the June is the one, because we just had some stuff in our favor finally yesterday. I think June would be my preference to where it starts to go down. So we'll slowly creep up until June, but it's probably more likely July. You hear all the news saying it's more likely July now. So once the Fed moves in July, we'll see it turn back to normal, and we'll start the downward trend. So I would say we'll probably get close to 8 before July.
Wow.
And DSCR is right around 8 right now, so DSCR won't go up. So that's going to be crazy when your primary is the same as the DSCR stuff, just because there's so much liquidity in that area.
Makes sense.
Yeah.
It's just
Cool.
it's just counterintuitive, but yeah, I would say July is when we would see, realistically, people will see an actual, the headlines change.
Awesome. Well, Nick, we have to thank you very much for joining us. A lot of cool information that I never knew of, never even thought about, to be honest with you. So having that information is always an awesome thing. But I wanted to make sure, if you guys do want to connect with Nick, the link is inside the chat. You can definitely do that. All his information will be there. Hit that button and you'll get sent to a website, our website. You fill out the information. The information will be sent right to Nick, and his information will be sent to you. Feel free to follow up with Nick and ask any questions. Check out his website. A wealth of information, a wealth of experience. And it's awesome to have someone like that join us for this afternoon.
Yeah.
Awesome.
Well,
Very
thank you
good.
guys.
Thanks, Nick.